So to better explain the magic behind the T2125 and all those things that you're currently spending money on that you could be turning into a tax deduction by having a home-based business, let's take a look at a little scenario of somebody who makes $30,000. Now, remember we mentioned that you could write off rent. I haven't included rent in this total because I'm going to show you what happens with a business that doesn't generate any income yet, but could still be profitable for you. Any money that you make through your business will just be gravy. Now, because you haven't earned income from your business yet, any expenses related to the household expenses such as rent, utilities, etc., cannot be written off against other earned income. So we're going to look at what can be written off against other earned income. Let's start first with your cell phone. We took $100 a month or $1,200 for the year. How about interest on items towards business that you spent on your credit card? Remember, now you can turn around and offset some of that interest as a tax deduction. So we took a conservative number of $1,000. Car, such as fuel and maintenance, we took $350 a month and cut it in half because you are going around dropping off flyers, talking to people, having meetings, etc. So you're using your car as a source for generating profit. Eating out. We took a total of $125 a month. The government allows you 50% of that, which is $62.50 a month or $750 for the year. There's utilities. Now we go to the internet, $60 a month, $720 a year. Office expenses, $45 a month or $540 a year. Children's allowance. Now, maybe you'll get your child to do a little bit of telemarketing for you. Maybe you'll have them do some online advertising, social media marketing. After all, kids today are fantastic at using the internet. So why not pay them to help you with your business? So we'll pay them $5,000. This becomes a tax deduction, and your children can, contribute to household expenses. You're going to want to control this bank account if your children are a little younger. Clothes, $50 a month or $600 for the year. We've got home repairs, and of course your business operating costs that we talked about, we've set in at $2,900. So everything above is money that you're already currently spending out, except for the $2,900, which is going to get you rocking and rolling in business. So on an annual income of $30,000, based in 2011, in the province of Ontario, taxes owed would be approximately $4,057. Your new taxable income would be $30,000 minus all of these expenses here, which is a total of $15,510. That leaves you with a new taxable income of $14,490. So the taxes owed on $14,490 are approximately $948. Now remember, the government, they've already taken their $4,057, yet they only require $948. This equates to a $3,109 refund for you. So think about this for a minute. It actually costs you money not to have a business. Now notice, we haven't even gone out and talked to a person, sold a product, or made any attempt yet to make money. Well, we've made an attempt because we've been advertising, but we haven't seen the fruits of our effort yet. As long as we show reasonable intent to generate profit, we meet the requirements as set out by CRA. Another advantage to this is under $20,000, you won't have to pay into OHIP. So this saves you approximately another $300. So doesn't it make sense to have a business? So what you've seen here is a very, very conservative example of what the typical individual can do in order to recoup money that they're currently spending in taxes. For more information, contact us today at 705-770-3564, or you can email us at finishwealthygroup@gmail.com.